Hey guys, it's Yassine here with Keith and Shannon. How's it going, Keith and Shannon?
It's going fantastic. Thanks, Jesse.
Awesome. So in part one of the crash-proof strategy series, we explored the signs of a possible crash or correction. We went through how real estate it goes through cycles. We examined the past 20 years cycle, and we saw that, hey, we're closing very fast. We're getting close very fast to the top of the market, compared to 2008. We talked about the Dow Jones, how on February 5th, just a couple of weeks ago, had a flash crash of over 10%. It lost 10% of its value since January 26th. We talked about how the Dow Jones, right? We examined the 100-year chart of the Dow Jones, and we saw that really it's almost, inevitable that the market corrects or crashes every 5 to 7 years. And we've been in a long recovery cycle since 2008. And the question is, are we overdue, or are we due for a correction now? So we explored. Now we can all agree that there is a correction or a crash looming. And the main question is of this part of the interview series is, what are the different strategies that we can put in place to immune ourselves and our family from a crash? And even most importantly, how can we profit from a crash? Because the biggest, greatest wealth transfers in history happen during crashes. And most importantly, which one strategy might be right for you? So that's what we're going to answer in today on part two of this interview. So let me go to Keith and Shannon here and talk about what are like the different options for someone to like maybe hedge their bets, or what are the different investment vehicles that someone can invest in, and how they are different.
And so we're going to focus on just real estate here. Or are we going to talk about some of the other things that someone could potentially invest in?
So yeah, so there's if you can invest in the stock market, in bonds, right? That's one investment vehicle. You can invest in gold, or you can invest in real estate. Really, those are the big three.
Right.
Now, again, if you're old enough to remember the 2008. And I'm assuming all our audience here are old enough to remember that, how bonds and the stock performed during the crash, right? Everyone lost their shirt. During crash and corrections, the smart ones go into the market, and they don't they're not in the market, right? They enter the market when the crash happens, but they're not over leveraged, right? So they don't let the crash get the better of their investment portfolio. So stock market, it's all about timing. The stock market. If you are in the stock market before the crash, bad luck, right? So if you enter the stock market during a crash, you're going to ride a great wave. So in terms of a crash-proof strategy, it's hard to argue with investing your money into the stock market right now. So that takes out the stock market. Let's talk about gold. Gold is a great wealth preserver. You can definitely trade gold. There are, gold ETFs and whatnot that you can trade. When I was back in Lebanon, we used to buy gold bullion, literally. So you can preserve your wealth in gold, but you can't grow it, right? It's a wealth preserver. You can't build wealth. No one got unless back in the wild west days, no one got rich owning gold, right? So that leaves us with real estate. Now, real estate also was big time impacted the housing market. There was a bubble. But the smart investors that had the right strategies actually turned big profit. So So really, real estate at the end of the day is one, maybe the only investment vehicle that you can preserve your wealth and even grow it in a crash. At least that's my opinion. So Keith and Chen, I'd love to hear your thoughts on the different investment strategies and how they tend to perform before and after a crash.
Okay. Yeah. Let's just take the big categories. Of course, there's niches within all kinds of categories, but the most common is leveraging that we had mentioned earlier in the series. The most common strategy that people think of is to go buy a piece of property and to either use bank money, your own credit, or to go borrow money from another individual called private money, or to go to a hard money lending source.
Yep.
So there's the leveraging. Now, in an up market, when you know things are rising, that may make a lot of sense, because if I can buy something for $100,000 today, put a little bit of money into it, and know that the retail value of it after I've put a little money into it's 200 or something like that. You know, with the market stable or going up, you're likely to make money as long as you don't make mistakes. On the contrary, if you believe or see signs that the market's going to turn down, well, what happens? That house starts losing value. And that money that you've put into it, or that money and credit that you've put into it, the gap starts closing significantly quickly.
Yeah.
And there's nothing more scary in the world to watch that go like that, and it goes backwards, and all of a sudden you've got 100,000 invested, and now that property's worth 80,000.
Which technically what happened during the crash.
Exactly.
A lot of
on a massive scale.
Yeah, foreclosures, underwater. Yeah, we're still, you can still get some of these properties today that were over leveraged.
Like literally, what had happened to us when we were considering, doing our due diligence on, do we buy this property? Okay, it's going to be, a $50,000, $70,000 renovation. If we can get it at this price, well, we'll be able to sell it at this price. Well, by the time that renovation was done, boom. That's what Keith's talking about. That number went down, and it was pretty scary.
Yeah. So then the next big category of investing is where you basically guarantee a seller something in return for the home. You guarantee their payments on the home if they will maybe deed you their home, or you guarantee their mortgage payment without the deed to the home, and then you have to go find someone to put into the house. But what I want people to focus on is, if you're guaranteeing payments to someone, which can be significant. A mortgage isn't cheap. They can range from a few $100s to several $1,000s. And if the economy turns, then not only is that seller really getting worried and starting to ride you, the probability of you finding somebody to substitute your guarantee, because you don't want to sit there and pay all this money for someone's mortgage without making something in return. Well, people are having a hard time finding jobs maybe. So you are stuck making payments to somebody. So those two categories of leveraging money and
properties or owner finance, basically, those are the categories. To fix and flip properties or to like deed properties, owner finance, subject to,
anything where you're guaranteeing a payment. You're guaranteeing somebody else, like if you place somebody in a property, you're guaranteeing that they'll make the payment, and all will be well.
So imagine if you could have a strategy that involved no risk, no borrowing money, no private money, no hard money, no bank money, no credit, and you're still able to enter the real estate market by taking zero risk, but you're helping sellers in situations that are motivated during these times, at any time, but particularly during a decline. And then you've got the ability to help people become a homeowner during this time while you're making money but taking zero risk or little to no risk. I guess there's always risk at strike of lightning, but you can't say there's zero risk in anything, but little to no risk whatsoever. And that's what we want to focus on. That's how we bailed ourselves out of the 2006 through 2009 financial abyss we were in.
Well, what you said earlier, Yassine, about how we make money is we provide value, we provide a service, and typically that involves a problem. And to be able to still bring that value to the table, to still be helping all parties involved and get paid on it with very little and pretty much no risk, that is the ideal situation.
This is awesome. I mean, as someone listening to you guys, I'm thinking, like, is there really a strategy like this? Like someone in the audience, I mean, I know you guys that, we've been working together, and I know what you're talking about. I mean, I've leveraged this strategy myself. But as a member of the audience, I'm like thinking, like, is there a really strategy where you can make money, where there's zero risk? Like, that's what I hear a lot of gurus talk about, but I have yet to come across one that really does deliver a strategy that does deliver no risk, no credit, no money, and you're still helping the seller and the buyer. So are we talking about a realtor? Like, what are we talking about here?
Well, it's definitely not getting a license. You can. Anybody can do real estate investing with or without a license, but it's finding a way to be creative. There's always, if you can really step back out of chaos and look at a problem, you can say, how can I solve these problems? And that's what we had to do during 2006 through 2009 was go, all right, we're in deep doo-doo here. How do we help ourselves? And so we came up with a process to get ourselves and keep those properties and exit those properties without taking a loss on most of them. Yeah. And then when other people saw us doing that, they were like, how did you do that? And can you do that for me? Yeah. And so that's that.
Walk us a little bit through that, Keith.
Yeah, because there is
my curiosity peaked.
Well, that was kind of the bug that took us about 6 months and then maybe 3 months with our attorneys figuring it out. Because when we owned our own portfolio, we're the owners. We can do whatever we want. We talk to the lenders. I know we were supposed to pay this off in 6 months. Here's our plan out. Will you work with us? So we handled all that. So after we liquidated our portfolio, and all those colleagues are saying, look, my fix didn't flip. Please help me. What did you do? We didn't have any ownership interest in that property. And so how do we make the paperwork where we can bring the problem and bring the solution together, but we still get paid for our service legally and just staying in control of the money as far as an investor. So that's what we had to figure out with doing what we did for ourselves for other people without an ownership interest in the property.
Right. So we're talking basically, guys, if you haven't figured out, we're talking about wholesaling lease options here, right? We're talking about getting involved in a property without putting any of your money, without putting any cash. You're only now, of course, your biggest risk is your time, right, and effort. That you might put out your time and your effort into a deal that might not pan out. That's where your risk. So walk us through what a lease option is and how it works and why is it the best crash-proof strategy?
Okay, so let's take the niche, because wholesaling lease options is a niche within lease options, because there are lease options where you stay in transactions.
And we're not talking
and
about
those
that.
are called sandwich lease options. What we're going to talk about is wholesaling lease options where you do not stay in the transaction. So imagine, take in a normal situation, a seller that has a house they want to sell. And they have three choices, basically, if they want to sell it. They can list it with a realtor. And what a lot of people don't realize is you sacrifice about 20 to 30% of your equity through an MLS transaction. And we could go through that, but there's just so many things. Sharing the closing cost. You don't get full price offer. There's seller help. The realtor typically can't market the house at the highest of the comps. They have to make it competitive for people to make an offer on it. So when it's all said and done, you lose 20 to 30% of your equity. So if a seller says, well, I don't want to do that, I'm just going to for sale by owner. Well, the issue with for sale by owner is most people aren't in the real estate business. They have never sold a home.
Right.
And so they get out there and all kinds of investors start coming after them saying, well, here, I can help you. And they get confused and they get frustrated.
Here's how can I help, like getting your property for 50 cents on the dollar.
Yeah.
Yeah.
Right.
And so they can have a third option, and that's to do a wholesale lease option on their house. And if you can present to the seller all of that equity you would lose in a real estate transaction through the MLS and partly through your own FSBO transaction, you're still going to lose a lot because you don't know how to negotiate all this stuff. How about you can sell your house with us and get full price from our offer, and we're then going to turn around and find someone that's near bank qualified. That means they make the income, they have the debt to income ratio, they have a down payment, they have a great job history, they have a clear criminal background check, they have a clear rental history check. They just need a little help with their credit. As soon as they can get their credit fixed, they can buy that house. And so 80% of the population that would like to own a home is out there wishing there was a solution for them. So you've got sellers that want to get full price for their home and not sacrifice equity. You've got 10% of the population working with realtors. You've got 10% of the population on a bell curve that is never going to get a loan because they just want to rent for their whole life or their credit's just too bad.
Yeah.
Then you've got 80% of the people that would love an opportunity to buy a home but need a little time to fix their credit. And if you can marry those two, the seller that just wants to sell and get a fair, reasonable, full price for their home, and somebody that just needs a little time to fix their credit, you put the two together and you can get paid a significant amount of money on that transaction up front and without waiting for any type of closing or anything.
And all in the meantime, you didn't get the repair calls or you didn't get any property issues. You didn't have to, fiddle with, mortgage payments. When are the property taxes due? You're not involved in that at all. And so like what Keith had said before, it's a niche strategy. You have wholesaling as a strategy. You have lease options as a strategy. And it's really bringing the all that we liked out of those two strategies together and, not dealing with the parts of those strategies that we didn't like. So
I love it. And and I get emotional about this sometimes because I was one of those 80% people where I went to the bank, my application got denied. I had a business. I thought I had a good shot at it. But, long story short, my application got denied. And I was like, I was bummed. But my wife was like, you seem like you've been doing lease option rent to own like for the past gazillion years. Why do we even need a bank to get into a house? So I was like, duh, right? Light bulb moment. So, I have a lot of investors. I know a lot of developers. And I came across a developer where they were just coming up with a new subdivision. And they were like building townhouses and whatnot. So I was able to negotiate rent to own on 2 new units, townhouses that we're actually finishing right now. Literally, I swear to God. We're finishing right now, 2 new houses, rent to own, and I didn't have to even beg a bank. Even though I have the business, but for certain issues, personal issues, I couldn't get the loan. Neither my wife could. So we ended up getting into a rent-to-own house, and we're going to live in one, and we're going to Airbnb the other one. So
Congratulations.
Thank you. So this is awesome. So so a lot of now. So I mean, if you're someone who's fixing and flipping, like, can you see how this can become a real it may become real fast compete as a deal source and another revenue stream for you, because a lot of these sellers that you're getting from your marketing, and they're not ending up like, you can't get them for 50, 60 cents on the dollar.
Right.
Maybe their house is not distressed. Typically, if you're a fix and flipper or you're a traditional wholesaler, you're throwing these leads away.
Oh my gosh, that is, I still have the memory. I mean, that's one of the pain points that prompted us to really figure this out, because we were in our office and there were stacks and stacks of leads that we couldn't do anything with because they weren't like what you talked about, wanting 50 cents on the dollar.
But we wouldn't throw them away because we paid for them.
We couldn't throw them away. We were spending like $5,000 and $10,000 in marketing. And so they were just piling up in our office. And we just said, we got to figure out a solution on this. So to answer your question and bring it full circle, keep your leads. If you're fixing flipping, if you're putting any kind of marketing out there, trying to find that needle in a haystack, keep all those other 90% of leads. You can make money on them.
Or you can send them to me. Yeah.
Yes. There you go.
Well, keep in mind, they reached out. They wanted a solution.
Right.
And,
they raised their hand and said,
at the time, we didn't have a solution.
Right.
But once the light bulb went off and we're like, oh my goodness, we can help the majority of these stacks of paper, our business just took off like,
and then
I can't.
Your focus from working with 10% of the sellers you're getting to shifting your focus to working with the 90% of the seller that you couldn't convert. And I think that's also a great strategy maybe for someone who's just getting started in real estate. Because one, there's not much competition out there. I'm still surprised when I enter a market and I try to like size up my competition, and I only find just few people dominating that market. First of all, I smile because I know I'm just going to crush it. But then it's like, why don't more people do this? Maybe it's people package it as a little bit more complicated. It's a more involved, compared to other strategies. It's a little bit more involved process because you're not selling to one. So in a traditional wholesale deal, you're selling to few investors, right? 5 investors who are buying all of your inventory, right? If you're a wholesaler. And a lease option, you gotta find a buyer for every property that you get, a new buyer. So it's a little bit more involved process, which is great because you know that a lot of your competition are just not going to put in the time. So it's a great way for you to jump in without spending tens of thousands of dollars on direct mail, without tying up your money into a fix and flip. And you can do it, with very little risk. The only risk that you're putting in, again, it's your time and effort.
Yeah. That's right.
Would you agree, Keith and Shannon?
Well, I would really want to talk. I don't feel that it's like if you're landlording, or definitely if you're doing sandwich lease options, it's certainly not more complicated than that. I get it that it's a shift in your thinking. When you think of wholesaling, you think of the junkers, you think of the cash buyer, all that. And it's the same process, but instead of moving a property to an end cash buyer, it's a longer term rent to owner. They're going to buy later on. So there's some, I get it that's kind of hard. How do you wholesale a lease option? But once you wrap your brain around it, it gets very simple. Because you're not landlording. You eliminate all the time, all you landlords out there where what property management really is like. It is not a passive strategy by any means. There's one other thing I was going to say too that's totally slipped my mind. So if you want to catch me here, usually he fills time and I'll catch my thought again.
Time and the money is access. You don't have to spend a lot of money on marketing because you can access the ideal sellers, right? If you have a for sale by owner, you have a for rent by owner, you have expired listings, there are abundance of them out there.
There are.
Access to market is much easier than because you can only access junkers, right? If you're either driving for dollars, or you have other people driving for dollars, you're spending a ton of money on direct mail. Right, you're putting a list that were properties that were built in the 50s or older or 60s or whatever. You can't reach junkers that easy, and you're competing with the hedge funds, guys.
Yeah,
there are guys with deep pockets that are fixing and flipping a whole portfolios of these properties, and every Dick and Harry watching Flip My House is jumping into the market and driving prices up. Yeah. There's really not much more for the average Joe like you and me to jump into this traditional wholesale market anymore.
Yeah, and there's so much competition in those other strategies that they're overpaying for these houses. They're not going to make any money but they're just pumping them out like a military out there, and they're overbidding these things at auctions. They're paying way too much. And then there's the whole, I won't even get into it, the daisy chain of taking your contract and wholesale and a wholesale, and it's like, come on, guys.
Out there. Well, I did remember what I was thinking. And because we have thought the same thing, because we've been doing this for other people since 2009, ourselves the year before that. And we've fallen in love with it so much that, I mean, it was definitely a vehicle to get us out of our hole. It wasn't necessarily long-term, we're going to do this forever, but we love it so much, that's what happened. This is all we want to do.
You're dealing with happy people.
Right. Oh, yeah.
It's a happy strategy.
But I think what happens is, you know, like take a sandwich lease option. Look, you get paid on the front end, you get paid monthly, and you get paid on the back end. That sounds really sexy.
When things are going good.
Get a lot of people. Rehabs, fix and flips. Oh, I bought it for this much. I only put this much in it. You know, it's easy to sell a very sexy, compelling thing. And the analogy that's coming to mind is, you know, the race between the tortoise and the rabbit. Right. The rabbit's all sexy, fast, and going. But you know what? This strategy, it might not be that sexy. It might not be all that flashy.
It works in an up market, down market, fast, slow. Yeah. Awesome.
Yeah.
And so awesome. So now we can all agree that lease option is probably the most appropriate strategy for you to crash proof yourself and your family. But how do you actually go about it, right? There are a lot of questions. Will this work in my market? How do you make your money? How do you find the sellers? How do you find the buyers? How do you talk to a seller? What property is ideal for a lease option? What property is not ideal for a lease option? And all of that's around the strategy. And I'm glad you asked this, because this is exactly what we'll be covering in part 3 of the series. So stay tuned. Keep an eye on your inbox for the next session, and we'll be talking to you soon.
See you later.